So we've all um watched the recorded sessions. If you were not in the last session, you've watched the recorded session. You follow up with the stuff you've practiced, and you drop the assignments that I take. Sorry, the assignment that I gave. I mean, so what I'll be doing next is questions and answers before we move on. I'm sure we have questions. Any question you have, some entered my DM to talk about questions they have. So if you have any questions regarding the last session or the recorded session, or what you feel like I should treat or I haven't treated pertaining liquidity, just unmute your mic and talk and ask the question. Can we all hear me? Oh, no questions, right? But I hope everyone can hear me clearly.
I have a question.
A question.
Alright, just
Can I
one by
share?
one. Yeah.
Can I share my screen?
Yeah, of course.
Okay. Is about this entry placement and stuff. For I'm trying to, like, if I want to place my SL, but wait, let my trading view load first. Like I'm trying to, like, I have a setup that I'm seeing now on good, but I have issue in placing SL. I don't know where I will place myself. Like here, I don't know why the network is slow like this. Like if I want to place my entry for this long, here,
That is not another block now.
should I place my SL like this?
Can you hear me?
Like this?
Hold on, can you hear me?
I'm hearing you.
This is not another block.
I'm hearing you. Yeah. This is FVG. So I don't know whether I should place my
I'm
SL
not talking about
this
every
side
year. I made it
or this
clear.
side.
I made it clear concerning the last session or the last this thing. And I told all of us that if it's not regarding anything I've thought yet, I will get there. You're not supposed to be asking questions on FVG for now at all. We haven't even gotten to FVG. I've never mentioned anything about FVG. Every question I should be
Ha.
pertaining every breakout structure. Why are you surprised? I made it clear. I made it clear. We are going on these things step by step. We haven't treated FVG at all, not to talk of where to place SL for FVG. Most people here too know what FVG is, but we are not there. We are going step by step. We are not even done with liquidity, and we'll be trying to talk about FVG. No, nah. I made it clear before asking the questions. I said any question from the last session or liquidity or from what we've taught so far. So you shouldn't be asking questions on anything regarding FVG at all. I thought you wanted to ask where to place SL when it comes to other block, and I was sure I've talked about that before. So I was even about to answer that. We are not asking questions on things I've not done here yet.
Okay, I did mistake, so I'm going to ask that one privately.
So any more question? Do any one of us here have any question?
Yeah, I have
All right,
question.
go on. Yeah.
Okay, so I wanted to give like a long speech on everything, but to summarize it all, while watching the last video, I think it's the last or second to the last, you spoke about internal and external structures. So I just wanted to know how are we going to identify those structures on the charts? Because you didn't see how to identify those structures during those sessions you recorded.
That means I didn't send it though. But I'll try to. It's actually a wide. All right, it's not that wide, but that means I didn't send on the rest of the session. But then I'll treat it on this session. I'll try and treat it. If I don't treat it, though, I'll make most of it.
All right.
And it's no problem if you have a long speech or whatever the question is. You can just table it down the best way if you have your questions.
All right. All right.
Any other
Okay.
thing?
No, nothing from me.
All
Okay,
right.
I have a question. I think he asked one of the questions I've jotted down. But then my other question is, how do you know if valid the liquidity, like let's say a valid one close to your PO, must it be that close to your POI, or is there a tool you use to measure that validity of the liquidity. I don't know if you understand my question, sir.
Yeah, I understand.
Yes, that's what my problem is.
Alright, that's a good question. I'll treat it. That's any more questions, please? Don't be afraid if you have any question or you are confused. Just ask the question in as much as is regarding to our last sessions or the recorded sessions or the things we've actually treated past over the weeks or that we've started. You can just go on and ask the question.
And again, sir, there was one pair I was USD JPY when I was back testing. On the 4-hour time frame, the liquidity has a week, but then when I scale down to I think 30 minutes or 15 minutes, on that 30 minutes and 15 minutes, yeah, I can remember 15 minutes, there was no week, but then it's still the liquidity that I marked out on the 4-hour time frame. So I don't know if I can still use it because when you are talking and then you said
Did
liquidity.
you screenshot the chart?
Oh, no, I didn't.
Can you still find it?
My network at home is always bad. Then if I get to the office, I think I will check it tomorrow and then screenshot and send it for you.
Alright, I'll
Yeah,
try
I,
and
can't, I,
check
won't, I
out.
won't be able to. I cannot access my trading view in my house. So there's one location I have to look for just to get network. My house network is very bad.
Alright, no problem. I'll try and check for that kind of example.
Okay, so
Alright, so oh my god, I think I have to write down the questions. But I can remember the first question was on was it internal and external structures, right?
Yeah,
it's internal and
internal and
external
external.
structure.
Okay. So let's assume this price action.
Guys, what happened?
So I don't know. I was taken out of this session. I think this always happens when someone is trying to record a session. So it will see it as a I don't know, unaccepted action. So just have it in mind that this session is recorded already. So just keep that in mind that it's recorded already. No need to record yourself again. So I try to make this how will I say it, realistic as possible. Because you see, most people, and even I myself, when I started, I only show you things like this. I handle break, relative equal I, and return to other block, right? And then maybe I draw another one like this. Change of character, double I, return to other block and sell. In fact, when we started, this was the image that I was sharing. I'll tell you a break of structure and I'll tell you return to other block and sell. But to be more realistic, these are just how will I call it? These are just illustrations. These are just summary. These are just small recap on what we are expecting. But you barely enter a market and it will appear this clean. It's 80% of times it will never accept this. It will never appear this clean. It can never appear this clean. These are just illustrations, right? For you to know that this is what is going to happen. In a more realistic way, this is how it always looks like. Something like this. Or almost something like this. Now I will break this down. Because looking at it, you can see what I'm saying. This is what the chart looks like. The chart doesn't just go break, return, liquidity, and tap. Now the chart contains both structural liquidity, both internal, external, sell liquidity, buy side liquidity, other block, a lot of conference. So you see everything in a more realistic pattern like this. I won't be saying any message. If you drop any message on Telegram, I won't be saying it. So if you want to ask a question, you can just unmute your mic and talk. No problem that you are going to interrupt whatever I'm going to say. But then if you have any question, just unmute your mic and talk. I think I already gave access to everyone to be able to speak. So if you have a question, just unmute your mic and ask immediately anywhere you are confused. Now, before I continue, we have internal structures and we have what? External structures. Now, have it in mind that most internal structures are liquidity. In fact, internal structures are liquidity. You can either say most of them are liquidity, or you can just say they are actual what liquidities. Now I will explain that. So when you see when it comes to external structures, if you are in an uptrend, let's say in an uptrend, you have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Now everything you see here, every structure, every break you see here are external structures. Every structure you see here are external structures. Now this is just the pattern. I'll show you what I mean.
Sorry, can you come in?
Alright, I'll go again. Now, what I just said is every outside structure here, every outside angle here is an external structure. And up here, every outside structure here, every outside break or angle they have drawn here is a what? Is an external structure. Do we grab that before I continue? I will expatiate, don't worry. But do we grab that before I continue? Every lows here, outside here, are external structures. And same thing here, outside here, are external structures. Now, do we grab that before I continue?
Yes,
Yes.
yes.
Alright. Now, everything you see here, inside here, you can see anytime I'm drawing this, I'll say higher high, then I'll say higher low. Right? I'll say higher high, then I'll say higher low. I'll say higher high, then I'll say higher low. Now, everything you see here, that just seems like I skip. Just hold on. Everything you see here, let me start this circle. I want to try my best and make this as understandable as possible. By now, you should understand what I'm trying to illustrate. Anything you see inside here, you can see they are not outside layers. Those are the internal structures. Now you can see they look just like a straight line, right? But they are not straight lines. And that's where we came into this. Now I really don't want to delete this. Let me screenshot before I go on. Now let me come again. Every outside layer here, having in mind the outside layers are the external structure, the outside angles are the external structures. Why the same thing here, you can see they are the outside, every angle here, every brick here, outside are the external structures. Why the inside of it are the internal structures. Okay, let me just mark, let me draw, let me say put 1 or 2. Yeah. It won't be showing that clear. But as I just said, every line here inside here are the internal structures. Now they don't look like this. Let me delete this. I think there's a cleaner. There's a cleaner, I'm sure. That's not cleaner. You know why I used it. Come, I'll look for it. Let me just keep using the delete this thing for now. Alright, I have what I just drew in my the other time in mind. Now let's draw another uptrend. Now clearly the first image was an uptrend, right? Clearly it was an uptrend. Now look at this again. Higher high, right? Higher low. And this was what I tried to draw the other time. But yeah, just tell me. I'll stay explain this further. Now this is also a what? An uptrend. As you can see, an uptrend. Now in a normal realistic scenario, in a normal realistic price action, this is what the chart looks like, not what I draw the first time. If what I draw the first time is how the market really moves, then everyone will be profitable, because that was very, very easy. Now look at the charts. You understand what I'm saying? Even though this is an uptrend, we still add internal breaks from the word itself. You should understand the meaning or what it's trying to say. Internal structures. Now, external structure. External structure. Now look at this. Higher high, right? Higher low. Higher high. Higher low. Higher high. Higher low. Higher high. Higher low. Higher high. You can see, and it will go on and on and on and on like that. Now that brings us here. That brings us here. Now where is our change of character here or break of structure? We add it here. Should be a break or is this really a break? Oh, hold on. Yeah, this was our break. Now, in an uptrend, I already told us in our last sessions, in an uptrend, you look for what? You look for buying opportunities. While in a downtrend, you look for what? Selling opportunities. Now, this is an uptrend. We should have it in mind that every sell, every moment we try to sell, we will be what? We will be wrong. Why? Because this is an uptrend. For now, we only have the knowledge on what? Other block. So let's talk only about what? Other block. When it comes to POI, actually. When it comes to POI. So let's talk about what? Other block. So you can see almost every other blocks here failed. Almost every other block here got violated. First of all, I've not even talked about liquidity. Maybe they violated because of the liquidity. Right now, I'm talking about they are failing because we are in an uptrend. So we are supposed to be looking for what? Buying opportunities, not what? Selling opportunities. Now, moving forward, I said internal structures are what? Are liquidities. And what did I talk about liquidity? Every liquidity will be what? Will be taken out. Now, since everything here is a liquidity, what happened to them? Let me change the color of this. Let me change it to red. Now, what happened here? This circle here is actually liquidity. They are the internal structures, which I call liquidity, right? And I said every liquidity is money in the market, or let me just say something is market that is supposed to be what? Taken out. When I say taken out means they will be violated, they won't be respected. They are supposed to be price will actually take it out. Price will go through them without respecting them. So this internal structure here is a what? Is a liquidity. And it will be what? It will be taken. And now look what price did when it got here. After making this low. Okay. After getting here, making this low, what did it do? It got violated. It took out all these internal structures, right? It took it out. You can see clearly it got here, reacted a little, got here, reacted a little, got here, reacted a little. But at the end of the day, it did what? Took them out. Now, this is one mistake most people, most traders don't understand. They'll think every brick of structure is supposed to be respected, or they'll just go to the market, they'll see a brick of structure, they see a liquidity, and in their mind, they are supposed to what? Market is supposed to sell from there, right? Now look at this first order block. Look at this second. Look at the third one here. You can see the break of structure, right? Here's the break of structure. Here's another break of structure. Here's another break of structure. Alright. And these are the what? OBs, the other block. Now this is the mistake most traders make. As I've explained from both scenarios, that external structures are meant to be what taken out. Now look at this other block, this first one. Even though we had a clear break, right? And then we have this, you can consider this relative, you can consider this relative equal highs. Okay, let me trade the OBs one by one, so not confuse us. Now we have these OBs, and you can treat this as what? Your relative equal highs. This internal and external structure is actually kind of an advanced knowledge, but I'll try my best to break it down to not confuse us. Now, still me moving forward. This is a relative.
Excuse me, I think King is raising up his hand, sir.
I thought I made everyone to be able to talk. Okay. So King, sorry, you can ask your question. Is it still there? You can ask your question now, King. King, are you there? Anytime you are ready to speak, you can just unmute your mic and talk. Now, as I was saying, we had a break, we had a relative equal high. And what did I say? Validate your other block. That's it, right? We have a relative equal and we have a break. But what did I call this internal structure? Everything internal structure. So this internal structure will be what will be violated, because internal structures are what? Liquidity. That an internal structure we hold is almost, it only happens, let's say 15% out of 100% in the market. An internal structure we hold, and that is even way advanced, because most internal structures are what? Liquidity, and they are meant to be what? Taken out. So if you see, let's say you're in a 1 hour time frame and you have breaks like this, and internal structures like this, you are not meant to take this trade, because eventually you'll be what, taken out of the trade. So you can see when price got to this OB, it reacted a little, it dumped a little to this place, and then eventually what, took it out. Why? Because it's an internal structure, and internal structures are what liquidity is to be taken out. Now let's come here too. This was a break, right? This was on our other block. Here's another one. Even without explaining, you can clearly see what happened to both of them. They got what? They got violated. They were not respected. Wow. They were not what? They were not respected. They got taken out. Now, over and over, every time we have an higher high, that's external structure, we always have a what? Internal structures. In fact, most of these internal structures are now always being used as what? Liquidity for our what? Our next POI. Now look at this. Relative equal low. But for someone that doesn't understand internal structures, you will see this as a break of structure, right? And you will see here as another block. But what will happen to him? It will be used as liquidity. His POI will be the liquidity, and it will get what? It will get violated. As you can see, it will get violated. Now, when other traders are seeing a buy entry here, what are you saying them as? You are seeing them as what? Liquidity. Because you have a knowledge on what liquidity. You understand what liquidity. And even if you try to buy from here also, which is a clear break of structure, right? It will still be violated because you only reacted a little and then took it out again. Same thing here. Now to wrap things up, to make things fast. When you are saying when they are saying a break of structure here, you are saying what? Liquidity. And as opposites, internal structures get violated, internal structures are liquidity. Why external structures? When you are in the right confluence of the trend, that's uptrend or downtrend, and your liquidity is active, your liquidity is what? Present, it will hold. So external structures are what is to be traded, while internal structures are what? Left out. You don't trade internal structures. Why? Because they are liquidities. Now look at here, look at this thing here. We have this other break, right? I had this break of structure. Now don't forget this is an external structure, right? We had this other block. Now to talk about others, to talk about the examples I've been giving on internal structures, look at what happened here. After taking out our relative equal low, which is the price tagged, so our take profit, showing us that it was and that's how it works. Internal structure will be used, while external structures will be what? No, external structures will be used as our entries, while internal structures will be what? Violated. Internal structures will always be what? Violated. Now let me take you to the chart. Now before going to the chart, any questions? Today
I have a question.
alright, go on.
What is the difference between internal structure and structural liquidity? Like, I mean,
And what?
internal liquidity and structural liquidity.
Internal structure and what?
Structural liquidity. I mean, internal liquidity and structural liquidity.
Internal liquidity and structural liquidity. If I'm trying to get you right. Alright. Everyone would have realized I haven't mentioned anything or talk about structural liquidity since. But and I don't think I've talked about anything internal liquidity. Now here's it. To talk about the fact, to talk about the point, there are different types of liquidity. But we are talking about the major ones, the one that shows in the market and the ones that actually moves the market and plays in the market. Now, if you say internal liquidity, you are still talking about internal structures. You are still talking about liquidities that are not around external structures. You are still talking about liquidities that are not around external structures. Now, to give before I move further for a fact, when you now say structural liquidity, I don't really think I've ever grasped that actually. But when it comes to internal liquidity, they are still internal structures that are happen not at the external structures but at the internal structures. So internal liquidities are just liquidities that are inside and not outside layers of your what of your price actions or market movement. Now let me show you this. This is a liquidity, right? And it's internal. Yes or no? Yes. And after doing his job, that's taking out the next low. As the price mitigated the other block and what took out the next low. We now add this. Now this is an external structure. But at the end of the day, turned out to be a what? Liquidity. After it has done its job. As you can see. And after it has done its job, that means if you had set short position. Right after doing his job, taking out the less low, it became a what? Liquidity. This is relative equal high liquidity. But this is a what? Internal structure or internal what? Liquidity. I won't actually call it internal liquidity. I don't think I will use those words anyway. I'm continuing on this session or class. It will always be liquidity for me, and just have it in mind that liquidities that happen internally at the internal structures are internal liquidity. Now they all do the same job. A liquidity is a what? A liquidity. Now have it in mind that with this kind of logic, that liquidity, the job of a liquidity is to be what? Taken out for the next POI to actually hold or be valid. So if you have a liquidity, if you want to go on with different type of liquidity, we will actually mention a lot. We will mention a lot. In fact, these days, some people will just come up with random names to just validate a liquidity that already has its own name. So when you see a liquidity, know it's a liquidity and have the logic behind it that it's supposed to be what? Taken out. Now if you see every POI here, after the liquidity has done its job, it eventually gets what? Gets taken out. I shouldn't have deleted the other one. But then, points being made, I think after we've done inducement, I'll expatiate on that too. Alright, that would be on inducement. Let me not confuse us yet. But talking about internal liquidities, just know that liquidities that happen internally, these internal structures, somewhere here, somewhere here, somewhere here. And even if we move forward, somewhere here are what? Liquidities. And even in fact, these major liquidities that I've been treating so far, someone made an observation that it barely happens in the market, which is very right. It's very right, because even the major ones, that's relative equal highs, relative equal lows, barely happen these days in the market, because you can't even let anyone lie to you. It is obvious that the market got more complicated over the months. It got more complicated. It's not as easy as it used to be. This is an example of relative equal high. You can see the wicks. It is not equal high, but it's relative equal high. Okay, before I move forward, did I answer your question? The last person that asked the question. Hope I'm not lagging. Did I answer your question? Is he saying something on John that can hear him? Alright, I'll just have to move on. So as you can see, this is an example of order block. I saw order block. Liquidity, internal structure. Because if you had assumed this was a break, or you assume this was a break because you saw a break of structure. Now if you have this, now if you have this scenario with the explanation I've made since morning, will you trade this other block? Okay, even as of now, the relative equal I was not formed. Will you take this other block, or will you take this other block? This one got mitigated, even though it's not an other block. This was his own break of structure. Now, with the explanation I made on internal and external structures, are you going to be taking this first one, this second one, or this third one? Okay, let me just make this one the first one. This below one as first OB. Second OB. Not OB. Now with these three, which one will you be taking? As these two, as explained in the line chart already. I'm trying to show us an example on the normal market chart. These two will be our internal structures, and we'll be expecting price to what? Take them out as what? Liquidity. These are not bad block. So this third one is what will be used as our what? Valid order block. This is the only valid order block here. Is an external what? Structure, and not an internal what? Structure. So you can see as expected. If you assumed this was valid order block, it got taken out. I think second one reacted. I'm not sure if it took out the next law, but eventually got taken out. Then our POI, which is the only order block that should be tradable, got mitigated. And as you can see, that's TP. So this is how most of this works. Now, let me show you one confusing thing about this. Because if I try to go on, I will take a long while explaining this. because we are actually not there yet. I just wanted to treat it, these external and internal structures. It's because it was on the last sessions that I shared. That's why I'm trying to explain it. But then, this is one thing about it. So you see here, some people will say, all right, this is a 2 hour, this is a 2 hour chart, right? Now, if you go to 4 hour, you can see everything got smaller, right? If you go to 12 hours, still going smaller, right? Now, your internal structure in a particular time frame, right, might be an external structure in another time frame. Now, no, don't panic. Now, don't get confused. Let me come again. Your internal structure in a particular time frame might be an external structure in a what? In another time frame. Now, look at this. Remember this one, this price action that I just treated just now. On the 2 hour, it was a what? It was an external structure. But on the daily time frame, it was what? On the internal structure. Now this is how you overcome this kind of panic or curiosity of what if, or in this situation, what am I going to do? Now, any time frame you enter, any time frame you are on to trade, right? Any time frame you decide that this is the time frame that I want to take my entry, that's the time frame you should check out for is internal or external structures. Because trust me, even on this 2 hour, these same external structures, internal structures, if you go to a lower time frame to them, they might be what? They might be the actual what? External structures. No, internal structures. But on the higher time frame, they might look like what? External structures. So to get yourself out of this scenario, or to not get confused of this scenario of thinking of when I was in 1 hour, I was seeing it as external, but when I went to what was it called, 4 hour, I saw it as external. No need to panic, because the way market moves, every internal structure too, there is price action going on under them, and they are playing out, but you won't see it because you are on a particular time frame. This is why some people you see, they'll trade 1 minute, 2 minute time frame and still come out profitable. Why? Because same thing that is happening on the higher time frame is happening on the lower time frame. You just have to spot the right ones. Now, as I've said, you can be on the 2 hour. You can see on this 2 hour, I mark this as external. Why this relatively call eyes as what? Internal. But when I went to daily, what happened? They turned to internal liquidity. They turned to internal structures, and they were used later on. After playing out, note that after taking out the next low, they became a liquidity and got what? Taken out. And that's how the market works. That's how market repeats itself over and over and over. The internal structures will play out first. You might just not see it. You might just see it as a small reaction. But on the internal structure, it has played out and it has done its job. But you are on the particular time frame, you decide that you want to trade is the time frame you should check for either external structures or internal structures. So as you can see on this 2-hour time frame there, I decided to trade. I saw my internal structures as what? Liquidity, and my external structures as POI. Now you get me. Internal structures as liquidity and external structures as our what? Point of interest. Now before moving forward, any questions please? I hope we are not confused. And if you are confused, just say, no matter how ridiculous it might sound, or if you think it sounds not too cool to you, it doesn't have to be cool. It doesn't have to be even straightforward. Any question that you have, just ask before I move forward. Even if it take us back, just ask. As I said, liquidity is very wide and complicated. So don't even see it as I'm not getting it, or I'm not smart enough to get it. Don't worry. It takes steps by step to understand fully what liquidity is or what liquidities are. So you can ask any question, no matter how ridiculous or small you think it might be. Any questions? All right. So I'll be moving forward to what was the next question after that question?
Excuse me.
All right.
I have a question. How can we
Okay.
know if a trade is a high probability and a low probability?
All right. With our knowledge presently, were you in the last session?
Yeah.
What did I talk about? Valid POIs and invalid POIs. Valid order blocks and invalid order blocks.
That liquidity must be close to the PI.
Or liquidity must be present, right?
Yeah.
Okay. Now, if you have a break of structure without liquidity, and you have a break of structure that has a liquidity close to it, which one will you consider a higher probability?
Please come again. The grammar.
All right. If you have a break of structure, right, and you don't have any liquidity before the break of structure, that means before the other block, and then you have another scenario where you have a break of structure, but you have a liquidity before it. Which one will you consider a more higher probability setup? On both
The one
setups,
with,
which one will you consider? Oh,
the one with liquidity.
the one with liquidity, right?
Yeah.
Good. Now, if you are in a just have that in your head for now, or jot it down. Now, if you are in an uptrend, right? If you're in an uptrend and you see a bearish break of structure that has a liquidity and another block, and then you have another bullish break of structure that has a liquidity before it. Mind you, we are in an uptrend. Now, in that bearish setup and that bullish setup, which one will you consider as an higher probability? Should I come again? Are you there?
Yeah. Come again. My network is cracking.
Can you hear me clearly now?
Yeah, I'm hearing you.
Alright. What I just said is if we are in an uptrend, right? And we have a bearish break of structure. That means if you have a bearish break of structure, we have a bearish other block, right?
Yeah, yeah.
Right. I want you to answer me immediately. I'm asking all these questions, please.
Okay.
Yeah. So if we have a bearish break of structure in an uptrend that even has a liquidity, and then we have
Yeah.
another setup that has a bullish break of structure, that means a bullish break of structure will have a bullish order block, right? And it has a
Mm,
liquidity before it. Now, in these two
mm.
setups, which one will you consider an higher probability? We are
The
in an
bullish,
uptrend. The bullish
bullish.
break
The,
of structure, right?
yeah.
Good. Now, another scenario for you. If you have a setup like this one that I draw here, you have internal break of structure, and then we have internal what? Other block also. And then we have this external break of structure. Which one will you consider a more higher probability?
Mm.
Between this internal other block and external other block, there is internal structure and external structure. Which one will you consider in higher probability?
The the upper one.
That's the external structure, right?
The external, yeah.
Exactly. Now, bringing all this together, right? Catching up all this together, like joining all this together, your time frame. No, did I say time frame? No. Your trend, that means uptrend or downtrend, your liquidity, and what else did I mention? Your internal and external structures. These three things are what brings together. What did I give in the first scenario? The one that has liquidity or not, right? Second
Yeah.
scenario, I gave you the one that has that correlates with trend, that means uptrend or downtrend, right? And the third one I gave us what? Internal or what? External structure. Now joining all these together gives you your what? Higher probability, and the one that doesn't have what? That is not what? Of higher probability.
Mm,
Now did I answer your question or not?
yeah. It's more clear. I'll jot that down now.
Exactly. So the things that at the time determines your higher probability setup or lower probability setups for the knowledge we have now, for the things that I've treated now, is your trend, that means uptrend or downtrend, your structure, and your words and your liquidity. So is it more clearer now?
Yeah, it's more clear.
That's good. Now, any more questions before I move on? You can just you see this is how I said whenever we're having a session, have a jot that down or somewhere you are maybe a notepad or a notebook, you are jotting things down. And even if you don't jot down at the moment, at the present, whenever you come back to the recorded session, you jot it down. Now, any more questions before I move on? All right. I just hope we are able to continue with liquidity tonight. So the other question the other time was, can someone please remind me?
Okay, I asked about how to determine a valid liquidity. Like, is there any measurement tool you use to
Okay, like
validate?
the farther it is to what's it called?
Yes,
Your
because
POI.
sometimes, yes, yeah, the distance to your PUI now. How do
Alright.
you?
Let me use another pair here.
You can't see your screen, sir.
Really, since or just now?
Connection.
Is it like since or just now? Can you guys hear me?
Yes, we've seen it now. It's clear now.
did you see when this person asked the last question and I showed them example? Did you see? Did you guys saw that?
Yeah, we saw it.
Yeah.
All right. So let me use another scenario. Let me use another scenario. No, did I say scenario? Let me use another pair. Um. All right. Let me just explain with a line first. You see, when it comes to something like this, I'll give us three. I'll give us three different scenarios, and I will explain with it. Now, looking at this first scenario, is the one is a perfect one, the one we use to illustrate most of the time, right? We break the liquidity to sell, right? Why the second one? Now look at where the other block is. And what are we supposed to expect after this liquidity? That mitigate the what other block, right? Now look at what happened, and this will always be our what target, next structural low. But see what happened here. Instead of the next structural low, market now broke this again to the downside. Market did not break. You can see here we had the break, which is still valid, which means broke our support, right? Market broke our supposed target here. This other automatically becomes valid. This other block becomes invalid. Why? Not only is it farther away, don't worry, there is really no precision in marking out the height or the length of how far it is to other block. But have it in mind that if your supposed target is taken out, first of all, that is almost a red flag. That before mitigating your other block, if it gets taken out for the mitigation of other block, and then your liquidity is this far away from it, it will barely hold. It is not as sure or as much of a higher probability setup to one that is narrow like this and has not broken your supposed what's it called structure. And yeah, if it happens like this is not invalid, that it is this near the other block also makes it invalid. But if it's this far away from the structural law, it becomes invalid. And when I say it becomes invalid, that means 100% of times out of 100, 80% won't play out. But if it's this near, like the normal scenario, then it is still valid. Now, before I show you on chart, let me show you this scenario too. You can see before here, we had this liquidity here. I had this liquidity here. And what did I say? It is invalid for now because it has broken the what? Next structural law. Now, in this case, instead of automatically seeing it as invalid, what you should do is wait for what? Another liquidity to form before it, which was what happened here. A liquidity will be formed after it because this will eventually be what? Taken out, and this is now our what? New liquidity, and you can see it is not far away from our other block. This our new liquidity will be used as liquidity, get mitigated, and take that the next low. Now let me show us on chart what I mean by this. Every liquidity you have must be almost showing you your next POI. And what do I mean by that? If you have a liquidity, it should be clear or fair enough that this is the next POI above it. You don't have a liquidity and you will not be looking up and down for what? The next POI. It should be clear that okay, once this liquidity gets taken out, this will be our what? Our liquidity. Did I say our liquidity? This will be our what? POI. Now let me show us this scenario. I don't know if did someone help my trading view that does not expired. I thought it was expired. And before the other, okay. Had a break. Now you can see these are taking out all the eyes. Right. Now what you will do is that this is not still valid for now. Until price forms another what? Liquidity. Close to your what? POI. So now as of this point, we had another what? Relatively called low liquidity. And even this can be used as your what? this one a more clearer one. Let's follow this. See what happens. As you can see, that's how it works. You have to. It shouldn't be that far away, and if it's far away, you wait for what another liquidity just before that POI to trade. So if it's looking far away in a way that after your liquidity, you start looking for, oh, where's the next POI? Where is the POI that is liquidity is trying to liquidate early buyers or sellers before it mitigates your POI? Then just know that liquidity is invalid. It has to be close enough. Might not be the closest, but close enough that you will locate your next POI. So did I answer your question?
Yes, sir.
Alright, see, to just wrap things up, I think while I was explaining all this, I've already showed us different examples of relative equal highs and relative equal low liquidity. Or do any one of us here still have a problem spotting them? Do any one of us have a problem spotting them? Alright. Now, did I talk about trendline liquidity in the last class? Trendline liquidity.
Yes, sir, you did, sir.
Did I explain it well?
No, you just talk briefly about the trendline liquidity, not really in-depth explanation about it, like the way you just did this ones now.
Alright. So you see, when it comes to trendline liquidity, let's say you had an uptrend here. After this breakout, right? After this breakout to the downside, right? All this line here, all this low, all these lows here. Let me draw this properly. All these lows here, automatically, you see, we were in an uptrend, right? Okay, let me come again. Immediately this breaks down to the downside. You know it's not supposed to break down to the downside, it's supposed to continue, right? Now immediately it breaks down to the downside. All these lows becomes liquidity. Now, first logic of why this, if your mic is still on, just help me mute it, please. First logic of all this becoming liquidity is what? This is a signal for what? Downtrend. So, for this signal of downtrend is about to happen, if you are still trying to buy, you are what? You are wrong. Why? Because in a downtrend, you're supposed to look for what? Selling opportunities. While in an uptrend, you're supposed to look for what? Buying opportunities. So immediately price gives us a signal that we are about to go down and you want to start buying again, you are wrong. You will be used for what? Liquidity. So eventually you will have this take out every low here, which has been used as what? Liquidity. And same thing with a bearish scenario, that means a downtrend, immediately price breaks this place out, it's already a sign that we're about to change trend, right? Now, everything you are doing here that you want to sell, you will be wrong. Why? Because price will eventually use it as what? Of this downtrend will become what? Liquidity that will be taken out. So apart from the logic of we have changed trend and we are about to buy, this under logic is most of these other blocks have been mitigated while it was following its trend. They have been mitigated. And what did I tell us about mitigated other blocks? They are invalid. So most of these things are most of the eyes here have been mitigated or has done its job. So after they've done their job, they eventually will be what? Taken out. So that's how this trend line liquidity works. I'm trying to remember something. I'm trying to remember something. Alright. So every scenario here, after the trend has been broken out, just expect that every low there or high after that break or after that change of